All right. Hello, ladies and gentlemen. Welcome into a terrific Tuesday here with Sweet Bobby. As you well know, real traders never trade alone. They trade with their fellow nerds. We've got Al, we got CE in the house, Dale, we got DB, we got Don and Dwayne and Skip and Jim and Matt Jollywally and Mo and Notional Ed and Ricardo and Stefan and Thomas and Vicky and Donner and Dasher and Blanchard and Vision and all the reindeer. We got everybody here. So, y'all, this is a great day. I have spent so much time over the last couple of days getting the new spreadsheet ready to go. And I think it's about ready to, I got to put a refresh button on there. And let's see what y'all are talking about here. CE says, I was thinking the back test on TQQQ is based on the market having gone up as much as it did over 10 to 12 years. To have that success going forward, we should have to have the same rate of increase. If we are at a top and bearish thinking it would peel back 50%, would it be better to be 20% TQQQ and 80% TMF? That is a good question. So what we would do is basically we would allow the spreadsheet to make those decisions for us. Now, you adjust your spreadsheet. I'm about to release it. I was going to release it yesterday, but it wasn't ready. So I think I've got it ready today. I've just got to do a refresh macro on it so you can refresh process very easily. But I think this thing is ready to roll out, at least for beta testing. And I can't wait to show it to you here in a few minutes. But first, let's look at the market. The NQ is down 0.24%, down 50 points. And ES is down a little more, 0.39%, down 22 points. And look at this. We have divergence. Does everybody see divergence? We have ES going down. We have AD going up. It is a good time if you are a scalper to go long, baby. Long, baby, long, because this will catch up with AD, and so will this. So if you're scalping any of these, I would be going long right now. But what do I know? Because I'm the worst scalper on the planet. Let's look at our big green monster. See what the big green monster looks like. Volume profile. And enemies are loading. There we go. We're down at the 50%. We anticipate this to be an area of support. And indeed, it looks like it is. So we're headed back up to the point of control. Let's see if we can find anything else on the NQ, see how it looks. And yeah, we would expect resistance right here, right? So we see support and resistance. Let's look at the linear regression. I don't think linear regression really tells us anything. We are now in another period of consolidation, and we'll wait for the next big move. We didn't have much of a big up move here in consolidation. And I think the reason we're having some consolidating candles is because of the uncertainty with the election, and everybody's just kind of sitting around for the next 2 weeks. And I don't expect there to be much movement in the markets for the next couple of weeks. It will probably be in the days following the election that we get a little bit of volatility. But up until it, it's probably nothing. And it looks like Israel is holding off a little bit from attacking Iran because their plans were leaked. And apparently they're redoing the plans so that they have the ultimate element of surprise as they go after those evil bastards. And I hope they kill all of the bad guys. I really do. I love the people of Israel and Hamas and Hezbollah. I hope every one of them rots in hell. Other than that, how do I feel today? Good. Look, y'all gonna love the spreadsheet. Let me pull it out for you so we can show you the spreadsheet. So here it is. This first page is going to look very familiar to you. It is the net lick. We know how to enter a net lick. So we started on October 1st with $75,383.48. I'll probably update this monthly, like on the first of the month, right? Now, here's the impressive part of the thing. We have a calculator. And the calculator, basically, you go here and you put in a couple of data points. And I've got the data points in yellow. this thing automatically, look at this, y'all, you'll like this. It automatically pulls in the price of TQQQ and the price of TMF and the price of bill, and it automatically pulls in the VIX. And I will have a little button down here that will refresh, but in the meantime, all we got to do is hit the refresh all button, and you'll see these prices automatically adjust. Isn't that cool? So here's what you'll do. You'll sit there and basically say, okay, today is October 1st. How much money you got in your account? And whatever you start with will be your high water mark, right? You got to keep up with your high water mark here, which is important. And was stop loss triggered last month? That means was the 15% stop triggered? And you'll answer that. Most of the time that will be no. So you don't have to worry about anything there. Pulls the prices of the three underlines that we're trading in. And then here's where you were talking about a while ago, CE, is what if the market is bearish? Well, we can figure that out here, right? So watch what happens. If all of a sudden QQQ is below its 20-week moving average. Well, let's first look at the 20-week moving average. So we've got something over here that is the 20-week moving average. And if QQQ is below its 20-week moving average, here's what we do. We say no. And so is it below it? And now what's this? Currently, this thing is telling you to put 80% into TQQQ and 20% into TMF. Watch what happens when you say no here. Well, it just told you that this is a bearish indicator, and it basically tells you to go 60% into TMF and 40% into bill. And then it even tells you over here how many shares to buy or sell of each of these assets. Let's make these bold. Let's make those bold. All right? So everybody see that? Isn't it cool? So let's say that it goes back to bullish again. All right. Now, let's say that QQQ is below its 10-month moving average. Here's TQQQ, here's TML, here's this. Watch what happens when this happens. If you're below that moving average, all of a sudden, you're only going to put 62% into TQQQ and 37% into TMF. And then this little thing very nicely tells us over to the side how many shares to buy or sell. Isn't that cool? What if now the QQQ is the 10-week exponential moving average is below the 20-week exponential moving average? Watch these numbers. Watch this. This is kind of cool. I designed this, so it's kind of cool. Let's say no. Now, all of a sudden, CE, you're only going to put 42% of your money into TQQQ and 57% of your money into TML. Now, watch this. Ed, you'll like this. Ed's going to freak out on this. Let's say that the federal funds rate was 4% last month, and now it went up to 4.83% this month. Now, watch this, y'all. I love this. All of a sudden, this thing tells you, get out of TML, get out of TQQQ, stay out of them, because this is a raising interest rate environment, much like 2022 was. And when both assets go down, as they did in 2022, it will save us from that and will basically put us in all bill. Isn't that cool? Isn't that cool? So what if you already had 1,000 shares of bill? Let's say you already owned 1,000 shares of bill. What's this? It says buy 1,090 shares. What if you already had 1,000 shares of it? Look at there. Tells you to buy 90 shares. Isn't that cool? God, I love this. You know how much time this took to put it together? Unbelievable. But it tells you everything. Now, this is the horse I'm riding in on, and this is the one that I'm going with. This is what I'm doing. Thank you, Ed. I thought you got that. So this takes into effect everything that we do here, and it goes over our rules. So let's see what the rules are. We've got a 15% stop loss. We got everything in this thing. I mean, it's got a little bit of everything that tells you to go to 100% cash. Let's see if that works. I need to double check that. I don't know if that works yet. Let's see. Let's say that the previous high water mark was $100,000. And let's say we go down to $80,000. Let's see if this works. This may not work. I may have to fix this up. Well, it does, but let's do it. Let's do this. Current portfolio value of $100,000. And let's get everything else back. Yes. What's this, y'all? Yes. 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 And let's get this at 4.5. No, sorry, 4.5. Oh, here it is. No, Bobby, 100. There. All right, so here it does work, doesn't it? What's this, y'all? If all of a sudden your previous high water mark was 100,000 and you go to 90,000, nothing changes, right? Nothing really changes as far as your allocation. But if you go down to 85,000, nothing happens, right? It's still 80-20. But watch what happens if you go down to 84,000. You go into 100% cash. That's our stop loss. We do have a stop loss in this thing. Isn't it cool? So this basically tells you what to do. Now, I need to give you a little bit of warning here. Do not blindly follow me into this. This is an extremely risky investment strategy. You may lose 50% of your capital or more. This is just a fun experiment that I'm having that's based on the last 15 years of data that would have taken a $100,000 portfolio to 40 something million. Doesn't mean that it's going to happen in the future. All right. Now, what's this? We also have trades. Does this look familiar? This is where you'll keep up with your Sweet Bobby hedges. If you want to keep up with them here, you'll put all of those in here just like normal. Then we have the Sweet Bobby hedge break even. You're familiar with this on how much to do your Sweet Bobby hedges. Y'all know that. Then we've got realized returns. What did the SPY start at? It's up 1.45%. What are we at? We'll keep up with that as our net lick gets in, and then it'll keep up with how many short hedges, how many long hedges, and the total cost of your black swan hedges, so you can keep up with that as well. So you're familiar with this. We also still have the put ladder in here, because if you want to buy puts every 14 days as a hedge, you certainly can. It tells you how much to buy and whether you want to buy those weekly or bi-weekly, and how much you can buy to spend 3% of your portfolio a year. It also has the VIX hedge, which is an optional hedging strategy that we are well aware of. If you'd like to buy VIX calls every month, it tells you the amount that you would buy for those 10 Delta calls that are out 120 days out, if you want to do that hedge. Now, here's the cool part. And for those of you that did AIM before, this will look familiar to you. This took a lot of time here. So basically, what this does is keeps up with how many shares of each asset that you own. So right now, I currently own 145 shares of TQQQ. It automatically brings in the stock price, and it tells you that I have made a profit this month on my TQQQ of $772. I have lost on my 44 shares of TML, $512. And my bill has made me $157. So I have $417.99 in profit. that cool? And then it graphically shows you the amount of TQQ in your whole portfolio that you own. This is the amount of TQQ I own, the amount of TMF I own, and the amount of bill. And then I want to keep track so I can go back and look at this. I want to keep track of what the algorithm is telling me every month as far as how much percentage is. So this is manually calculated. So when I first started this month, it told me to put 80% in TQQQ. It told me to put 20% in TMF and none in bill. All right. Even though we've got bill because we're just using 1/6 of our capital. So, but it didn't recommend bill. We just did bill on our own. Now, you say, how does it get this information? How does it know that I've got 145 shares, 44 shares, and 680 shares? Well, because that is where we have this little page here that is share activity. And share activity is where you buy and sell. So every time that you buy, you go in and put this information into this part of the spreadsheet, and it automatically keeps up with your number of shares. So I started out with 146 shares. I sold one share on the second to get it back in line. So it correctly knows that I've got 145 shares in the portfolio. You don't have to worry about the variable page. The variable page just has the delta, theta, buying power, and all of that. Above, below, yes, no, those type things. So you don't need to do anything here. This is just where I put variables. But isn't that cool? I'm very excited about it. All right, let's see how our account's doing. So CE, that should take care of it. If things are bearish, it basically gets you out of TQQQ. And, you can play with those formulas too if you want to and make your own spreadsheet that does your own things and your own percentages and all that. But this is just what I'm going with. And it's based on a ton of work that I've done on back testing. Just a ton of stuff. So it's the best that I've got. It's, I can't do any better than what I've got. So let's see how our little account's doing today. Oh, this dog and these allergies are driving me nuts. Let's log in here. See how we're doing. And really, I want to look at my hedge and just see how our hedge is doing. So let's see how our hedge is doing as this thing loads up. There we go. So let's see. Let's go to positions and we'll go to count requirement. And let's look over here and see what we've got. So this is on the Crimson Orchard account. Let's do ES and let's do TQQQ. We're not going to worry about bill and we're not going to worry about an uncorrelated asset, TMF. And let's get this thing all done. So we're at 76,207. Now that's interesting. Let's see where we started at. We started at, come here, little thing. That's my back testing stuff. Hold on a minute. 76,207. Let's see how far we're up this year. 76,207. 76,207 minus 75,383 equals $824 of profit divided by 75,383. See what we've done. So we are up 1.09%. Now that doesn't sound like a lot, but here's the good part about it, y'all. We're only using 1/6 of our capital, right? We're only using 1/6 of our capital. So we can go over here and say that we're getting beat. The market's up 1.44% in that same time frame, but at the same time, we're only using 1/6 of our capital. So I would say that is reasonable. Close this. What is this doing?
close that. There we go. So let's see if we got a hedge still. Let's go to risk analysis. Risk analysis, we're going to change this up to 40. And we're going to go percent, we're going to go points. And make sure we got all our stuff here. Here's our TQQQ. So we need to adjust this to make that a 60% down. 65 to 60. So we've still got about a $20,000 hedge to the downside. I would take it.
Yeah, Matt, I think you're right. Could you try it with $1,000? Sure, you could. Yeah, put $800 in TQQ and 20 or whatever the calculator says, and just kind of follow it along. And all you got to do is watch it once a month. Besides 2022, what are the other times we would have gone to cash, and does it happen that often? Well, let's just take one of our indicators, and we're going to go through a bunch of them on Friday. Yeah, it may be a nice egg for the girls 15 years from now. You never know, right? Just see what it turns into. And that's all this is, y'all. This is a calculated gamble on my part. This is not prudent investing. This is not, my retirement money that I'm going to make sure that I have so that I can provide for my children. And I mean, this is fun money. This is fun money. This is just fun money. So let's just look at a couple of times that this may have helped us, right? So why don't we go to, let's see. Let's see. This is weekly. Time frame is 3 years. Let's do, I'm going to do 5 years back. Maybe look at this, yeah. And let's go in one so we can see when this would have saved us. Okay. So here we go. It would have saved us, let's see, basically if price is below its 20-week moving average, and we only look at it once a month, right? But look what it would have saved us from. Everybody see this? This would have saved us from this. Here is 2022, y'all. It would have saved us from 2022. Let's see where it would have saved us. Here's a little bit of time, depending on, this is a weekly chart, depending on when we looked at it. Here's 10-2, here's 10-9-25. So we would have probably been out of the market for this, right? And then would have got back in over here on 11. So we would have taken a month off from TQQ right here. See if there's any other time that this did it. No. But one of them I really want to show you is this, y'all. I want to show you the monthly MACD. Look how pretty this is. Look how pretty this is. Let's go see this. So monthly MACD, it's hard to tell in here. We'd have to log into there, but here's a little bit of period of time that you would have been out of the market. This one looks like we're in the market, but here was the big one that I saw. This got us out of 2022. So we would have been out of it all the time. Well, you say, now, wait a minute, Bobby. We would have been in TMF though, 60% cash and 40% TMF. No, we would not. Remember, this was a rising rate environment. The rate change would have been more than or equal to 0.5 percentage point, and that would have got us into cash here. This would have got us into cash or bill. If you want to do cash, that's fine. If you want to do bill, that's fine. And we would have not gotten back in until around in here, which is about March of 23. Let's see the other one that we've got. We've got the weekly MACD. First of all, you look at the monthly MACD, then we look at the weekly MACD. So there's just a couple things that we look at, right? It's not like we've got a ton of different stuff to look at. But what I did, and I'm going to show y'all the research. I'm going to show you physically the research that made me choose the MACD, that made me choose to look at the RSI divergence. And you already know the research or the videos that I've shown you on the monthly simple moving average and the 10 and 20 exponential moving average. You already know all that. So I will be able to share that with you guys on Friday. Okay. So let me put a refresh button on this thing. And Muscadine Mafia members will get this spreadsheet today to play with and see if it's got any bugs on it. You know, double check the calculations, but I think they're pretty good. And everybody have a good day, and I will see y'all tomorrow.